dive into the world of investment and explore how to start a successful investment journey. We'll talk about investment concepts, different types of investments, and the importance of good financial planning. Investment is the process of putting money or resources into something with the hope of achieving a future financial return. Investment can be made in a variety of assets, such as stocks, bonds, real estate, commodities, and even new businesses and projects. The main goal for individuals and companies in investing is to increase capital or achieve a financial return that exceeds the inflation rate. Types of investments: stocks and bonds. Stocks represent ownership shares in a specific company. When you buy a stock in a company, you own a small part of that company and become a shareholder. The value of stocks constantly changes based on factors such as company performance and market expectations. Investors can gain returns from stocks through capital appreciation, increase in stock value, or through dividends. Bonds are debt instruments issued by governments or companies to raise money from investors. When you buy a bond, you are lending money to the issuer, government or company, and receive periodic interest payments yield on the loan amount. Bonds are typically considered safer investments compared to stocks, with lower returns, but also lower investment risk. Bonds have maturity dates, at which point the issuer must return the principal amount to investors along with the accrued interest. Investing in stocks and bonds involves careful market study and financial analysis, and it depends on the investor's goals and personal risk tolerance. Real estate. Investing in real estate involves purchasing properties such as houses, apartments, or land with the goal of generating a financial return. Real estate investment is one of the most common and popular types of investments due to its various benefits, including generating financial returns. Real estate investments can provide stable returns through continuous rental income from tenants. Profits can also be made from selling properties in the future at a higher price than the purchase price. Inflation protection. Real estate has the ability to protect investments from inflation, as rents can be increased to keep up with rising living costs. Tips for beginner investors. Here are some important tips to help beginners start with confidence and achieve financial success. Learn and gain knowledge. Before starting to invest, do your research and consult reliable sources to understand the basics of investment and different types of assets. Set financial goals. Define your short, medium, and long-term financial goals. Setting goals helps in determining the appropriate investment strategy. Determine your risk tolerance. Acknowledge your ability to tolerate financial risks and consider it when making investment decisions. Diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different assets to reduce risk and increase stability. Invest in what you know. Invest in sectors and companies that you understand and are knowledgeable about. Good market understanding can help in making better investment decisions. Gradual investment. Instead of jumping directly into investing large amounts, start with gradual investments. Regularly evaluate performance. Monitor and evaluate your portfolio's performance regularly and update your strategy based on results and market changes. Continuous analysis. Keep learning and analyzing the market and investments, and be prepared to adapt to changes and make appropriate decisions. Along with following these tips, beginners should also seek professional financial advice if they need additional help or guidance in their investment journey. If you enjoyed this episode, don't forget to like and subscribe to the channel. See you next time.